Morning, everybody. Welcome to today's episode of Canadian Mortgage Weekly. I'm so excited that you guys are all here to join me on today's episode, episode 25. So this is a really exciting episode. We're a quarter of a way to 100, which is really awesome that we've been able to consecutively do all of these videos, and hopefully it's been really good content for everybody. We've covered off a lot of amazing topics, refinancing for various reasons, going over pre-approvals. We've had lots of special guests chatting about the mortgage and housing market over the last say year or so. And yeah, it's been really amazing to be able to do this show with all of you guys. So if you're watching the video, please comment, say hi. We'd love to just chat with you a bit. And yeah, again, thank you for being here this morning for episode 25. So just to introduce myself, so my name is Sam Thompson, and I am a mortgage agent in the Barrie Simcoe area. So originally from Ottawa, but I moved down to Barrie last year in about February, I guess. So right before COVID hit. I've been in the mortgage industry for just over a year, and primarily my role in our office is working with a lot of the first-time buyers, but I've been working with a lot more refinances. And yeah, some new to Canada purchases, a lot of people using the first time buyer incentive. And if you have checked out any of our webinars through Joe Bladdock, you'll know that I am the first time buyer Zoom webinar presenter. I like working with first time buyers because I really feel that, there's a lot of things that are out there that are great. Ways to get cash back or incentives available. And I love getting to just, educate those new buyers and help, de-stress as much as I can. And usually we are joined with Joe Bladdock, who is the mortgage broker that I work with here in Barrie Simcoe. And Joe has been in the industry for over 10 years. He's the big kahuna if you have any mortgage questions, a tricky situation scenario. Joe's definitely your guy. And we also have Terry Lynn at the office, who again does lots of our referral calls, and she is the document queen. So we have a really awesome team working all together, Joe, myself, and Terry Lynn. So yeah, if you get any of these videos that you've been watching, if you have any questions, or you feel that you want to expand on what we've talked about or to see what you qualify for, please give our office a call, and any of the three of us will love to chat with you. Yeah, so I guess I can cover off a little bit of news. So we've still been, sort of pacing out to see how the stress test is really affecting people. And again, predominantly first-time buyers are the real ones that are getting hit with this, because they already, a lot of them that I chat with, they already feel very boxed out. So again, I'll say it again, the bank of mom and dad has become very common and a very normal thing that we're seeing now. So again, if you have watched our previous episode with Barry Ray, and you're thinking as as someone who has already owned a home, and your children, maybe they have family or a grandparent now, and they're looking to get into a home, and you're wishing there was a way to help. Well, you can get lots of programs that are available, such as chip mortgages, that can really help you get them into their dream home and start being an active financial role in their lives again. And also we have seen, there was a article that I had read prior to coming on this morning from the Canadian Real Estate Association, and they're saying that they're expecting prices to remain elevated, and that actually the average price will have an annualized gain of over 19%. So this is again an awesome situation if you are a homeowner, because a lot of people everyone's calling it. They're expecting, there has to be a pop, there has to be an immediate drop in prices. But really, what we're seeing in the market is that there's not a whole lot of evidence to support a pop where the prices are just going to plummet. Everyone's going to be, left shorthanded. We are expecting prices to soften a little bit over the next few years, but not expected to be anything gradual, as they're saying that prices are, expected to remain high. But also, we are expecting from that same article that the inventory is about to rise. And if you were on any of our previous videos, Joe and I had chatted about a few articles and interviews that we had seen with financial with finance workers at I believe it was BMO and Scotia, or sorry, it was TD and Scotia, and they were claiming, at least the Scotia advisor was talking about a slingshot that was expected to happen, where we'll see it kind of not slow, but just remain kind of at the pace it has been for the summer, but then see a real release in the fall. So that could definitely be, a cause and effect from more inventory, because that still, is a problem that is starting to be remedied. We're seeing more and more houses that are available for sale. But, you can expect a busy fall if you're looking at getting into a home. There might be some more inventory just on the horizon. So without spending all my time chatting about, the mortgage news, I do want to continue with our 4-part series. Today, I get the pleasure to conclude the series today. We were doing a 4-part spring into summer series. So if you were able to watch the last 3, you've seen that we looked at how to refinance to add a pool, a deck, fencing, all of that in your backyard. Our second video in the series was chatting about upgrading the big ticket items, your roof or your furnace, some of the expensive things that, once the snow clears and you go outside and you realize all of your shingles are curling up, it's time to get that replaced. And then last week I had gone through finishing a basement and adding an entertainment space so that you can enjoy more of your home and add some entertainment value to, I don't know about you guys, but I always grew up with a unfinished basement that was mainly for storage, or, it was more of a rec room than an actual finished and really usable space. So it was an awesome video looking at, how the financing can work for that. And today we're going to be looking at how to refinance to purchase a cottage or a vacation home. So this is going to be refinancing to take out the down payment. So this is a big commitment and a big investment, but we thought, or I was thinking, we could end off this series on just a high note, on a bang, that you can actually refinance a property that you've owned to purchase a cottage to have, because I know that, once you have numerous kids running around the house, it's nice to have a place to go where you can actually kick them outside and they've got swimming, they've got all these things. So I'll be looking at that today. And without further ado, I can go ahead and just share my video. I have a real quick presentation to run through with you guys on just a case study and some of the factors to consider. Alrighty, so you guys should be able to see that. So we got the awesome Muskoka chairs. Okay, so today's video, all about purchasing a cottage or vacation home. So there's, a lot of benefits to owning it. Obviously, you've got a space to go. You have, yes, a space to go. You have more, freedom to move around. It gives you a static, but a consistent vacation spot to go. So it's not like, you're having to replan this big vacation every year. And you can also be upgrading, fixing up, adding things to your cottage for the life that you have it. But there's things to consider about if you have the cash flow, if you have enough equity in your house. But it is a great opportunity, because usually cottages are in families for many, many years. It just gets passed down, or, purchased by another family member. The kids take on the property and it just stays in the family. So it's a great almost a legacy expansion that you can make with your finances by purchasing a cottage. So again, some things to consider. You'll want to know what the current value of your home is, as well as the current balance and how much debts that you have. You'll see the next point is cash flow, because there will be 2 mortgage payments. So you have to make sure that you don't have any major expenses that are coming up, as well as owning the second property, because the 2 mortgage payments, although they can be low, you'll see the numbers when I go through it in a bit. But you want to make sure that you're able to make both of those payments, as well as, if you need to get a car and there's car payments, or, you're helping one of your children with school debt, or, things come up. So you want to make sure that you have the savings to protect you, or even an emergency fund to make sure that if you make this investment in this purchase, you still have something to fall back on. And also things to consider. We've seen it a couple times where there's actually applicant pairs. Sometimes it's a great opportunity if, your sibling or sibling-in-law, if they're starting their family as well, and you guys can actually split the down payment. You can go on as co-applicants to help soften, the mortgage expense, as well as, splitting payments is a way, or working out amongst yourselves how the payments are going to be made. But that's a great way for you to, again, keep it in the family, but have it as a shared expense, and no one's on the hook for purchasing it and doing all of that. So if you find that it's something that you really do value and something that you want to do, but maybe don't have the cash flows or the finances to support it, adding a co-signer is absolutely an option that you can proceed with. So the costs involved. So if you're looking at refinancing in the middle of your term, there will be a penalty for breaking your mortgage to refinance, to take that money out. There also is going to be a good amount of legal fees, because we'll need legal fees to do the refinance, as well as legal fees on the end of the purchase. The down payment for the cottage is going to be required, and a way to soften the amount that you're actually paying on it is to put a higher down payment amount. As well, because it is a purchase and you're no longer a first-time buyer, you will have the full land transfer tax, as well as just regular closing costs with any other purchase. So let's just jump in and see how this case would work out for Peter and Wendy. So this couple is, they live in Peterborough. They have owned a home there since 2011. So their home is coming up for renewal, and they're thinking, once we're at renewal, why don't we refinance without a penalty and take that money out for the down payment for the new cottage. So when they purchased in 2011, it was only $340,000, and it's been quite a while. Since that they've owned it, there's been a lot of appreciation, especially with COVID. It's actually really helped people have better appraised values, just because the comparative sale values are so much higher. So the home is appreciated in since 2011 to $595,000, and they've been able over that time to pay their mortgage down to $219,000. So they went in at $340 with 10% down back in 2011, and now they only have a mortgage of $219,000. And they are both doing actually quite well for themselves. They have a household income of $125,000 per year, and they have worked really hard to pay off all their existing debts. The 125, that includes, both of their employment income, and also it includes some CCB or Canada Child Benefit that Wendy is receiving for the few children that they do have. So they were looking, and they had found a cottage on Bennett Lake. So it's near Perth, just a few hours north of Peterborough. If you continue up Highway 7, it's the old, my old stomping ground in the Lanark County area, maybe a little south of Lanark. But they have found one that's listed at $479,900. So that's a pretty achievable price. I actually got that, from a listing when I had looked at, some cottage prices in that area. So they will refinance to take out $176,000 $538. So that's only for the purchase. So that's the additional funds that they'll need. So that'll cover a down payment of 35%. It should also cover the approximate land transfer taxes, as well as about $2,500 in there to cover the legal fees for the new purchase. So the new mortgage on their first property, after they do the refinance, to take out the money, they're also going to need to pay out the existing mortgage and add the legal fees into that payout refinance. So after refinancing on their new home with the new value of $398,000 and change, their monthly payments are $1,751 a month. So now when we look at what happens with their cottage purchase, they're able to put the $176,538, the down payment portion of that directly into the cottage. And again, because it's over 35%, we're able to extend the amortization period to 30 years, as well as it won't include any CMHC or Genworth or Canada Guarantee insurance premiums because it's over 20%. So their mortgage for the cottage that they're currently, that they've just purchased is $311,935 with a monthly payments of only $1,165 per month. So really it's actually, quite similar payments. But again, considering the added benefit of having a cottage and a second property, this is actually refinancing to take out their equity, has enabled them to make that second purchase and bridge the gap between, just owning a single family dwelling to being able to own a vacation or a secondary property. So final thoughts. So they were able to refinance their home. They have enough funds to cover their cottage down payment as well as closing costs. So the land transfer tax, the lawyer fees. They could even have stretched the numbers a little bit more just to give themselves a little extra money, if it costs to, do a few little renovations to the cottage when they purchase it. So if you combine their monthly mortgage payments they're only paying $2,917 per month. So that's the mortgage payments that they're making on both properties. So now, again, as I was saying, they have a vacation home on a lake. It can provide them with entertainment for years. So this is something that I think a lot of people discover mainly in the summer, which is where I found it was a fitting conclusion to the spring into summer series, because, the longer that you're outside, the more you're thinking, we should be getting out more. We should, maybe go camping, or you even find an Airbnb up in Muskoka and you think, oh, we should look into what the costs are to make that happen. So again, looking at the final thoughts, so they could have added co-applicants to the cottage. They could have split the down payment. If both of them came with a high down payment, it would, save the amount they'd have to refinance, or they could just put even more down and reduce the mortgage payments even further, as well as they can, help each other with the payments as a co-applicant pair. And what some cottage owners opt to do is just run sort of a casual Airbnb to their cottage for the weekends that they're not using it, or sort of in the off season when they don't have time to visit it. So it can also be a source of income if you're planning on, renting it out on temporary bases, or, just for vacation weekend rentals through things like Airbnb. So if you've ever considered purchasing a second property or a cottage, reach out today to get an estimate for your financing, because again, I will admit that Wendy and Peter had a very good scenario, that they both had a very high household income with no debts. So that's just to show sort of how it works and what the payments would look like, with just the one property versus having both of the cottage as well as their existing primary residence. So again, it's very case to case, but it's something that we can discuss if you would want to reach out to our office, and we can see how we can use the equity in your home to get you, possibly into a cottage or a secondary vacation home. So you can reach out to us at 705-238-3479, or even email us at joe@joe@joebladdock.com. So that is the end of my presentation today. I hope it was, encouraging if you're somebody who is looking to get into a second home, purchasing a cottage. If it's something that you've considered, chatting about with a family member to see if you want to purchase one together and, split the costs of how that all works. But yeah, if you have any questions at all, or if you have considered this and are interested to see what the financing would actually work out to be, feel free to reach out to our office. We would love to answer any questions that you have or make sure that the financing can work based on where your house price is at. If there's a penalty, would you be saving anything by refinancing on your current home? And really, what's your maximum qualification to purchase a secondary home? So thank you guys so much for joining me this morning. We will be back next Thursday at 11:30 for episode 26 of Canadian Mortgage Weekly. I hope that today was a great episode, that you learned something, or that, again, maybe it encouraged you to at least start thinking about, how to use your equity in your current home. And I really hope actually that this whole series has been useful for you to see in what ways you can use a refinance to do either home upgrades or the purchase of a new property, because there's a lot of things that your mortgage can actually enable you to do. I think a lot of people think that, mortgages, you're locked into payments, you're just paying out, it's kind of hanging over your head. But by using refinancing and capitalizing on some low rates, you can actually do quite a lot with your mortgage as long as you have the equity in your home. So definitely call out to our office or comment on the video. Feel free to direct message us, through any source that you're watching this through, if it's YouTube or Facebook. We would love to get in touch with you and chat some more. But until then, I will say goodbye, and I will see you next Thursday at 11:30 for episode 26 of Canadian Mortgage Weekly. So thanks so much and have a great day, everybody.